Hi guys, I'm back again with another video. It's been a while. Straight to the point, guys. I hope you're good. I'm good on my side. I just wanted to do this video, guys, because it really might help somebody out there. So what I'll be basically doing, right? I'll be basically showing you ways, guys, in which you can improve your technical skills or technical analysis, if you will. And yeah, and also I will be covering like 5 points, 5 tips as to how you should go on about that. So I'm going to start with the on USD to do the first point. So the first thing that you need to do in order to improve your technical analysis, guys, is not dwelling too much on the past price, right? So I'm going to show you exactly what I'm talking about, right? So in a way, I'll be more like analyzing odd USD, but and actually explaining the thought process and the method by which I'm trying to illustrate what I'm talking about. Okay. So yeah. So we're gonna start, for example, here on the daily time frame. Okay. So as you can see, it's important to be zoomed out so that you can understand the price quite clearly. So as you can see, we have a low over there, right? And then you can obviously see that we have a market structure that was trending to the downside. Okay. So we can just do that, right? Because the past price, guys, helps you understand what's most likely to happen currently. But as you move forward, then you need not to focus too much on it because it's the actual price that becomes much more important after you've analyzed the previous price, right? Because you're not going to buy the previous price, you're going to buy the actual price. But in order for you to understand the current, you need to understand the past, right? So if we drop it to the 4 hour time frame, illustrate this a little bit more. So as you can see, we have this bearish structure. We know that in a bearish trend, we have lower lows, lower highs, lower low, lower high, lower low, lower high, lower low. Possibility of a lower high there. So that's what we know, okay? So we would highlight these impulses and corrections, okay? Impulse correction, impulse correction. All right, sure, that's what we know, okay? That's good. That's good. All right. So, but moving forward, the point of analyzing this market, the whole, so us analyzing this past price and this market data is for us to get a sense of idea as to what is most likely to happen at this point, meaning that will odd USD repeat what it has been doing previously? That's how you use the past to understand the current. But it does not necessarily mean that just because the market has been moving in this type of ways, then it has to. No, that's not absolute, but we can use that to understand what could possibly happen here, given this type of past market data. So once we understand that, then it becomes less important for us to dwell much deeper on that because we already understand what has been going on in the past. So when we move forward now, we then need to focus on the current price because we may not necessarily, we could at the end repeat the same type of thing, meaning that if the market could do this, and complete a full correction towards that top, then it's only then that maybe it would repeat the same thing, right? But for now, we need to understand what's going on here and treat the market accordingly without thinking too much about what happened in the past because you already have a sense of idea as to what could possibly happen in the future, right? So if we can just quickly erase that, and then I'm just gonna go there. So obviously here we're anticipating the possibility of a third touch there, as also given the current CPI in the US. So there are high chances that the other pairs like AUD USD, Euro USD are gonna continue being buys, right? Because of the weakness of the dollar. So we can obviously see that we have that trend line over there and we have that one over there. So this is more like a repetition of what is going on in there. But it does not necessarily mean that the market could sell all the way down. But what it can do, if it wants to complete a full correction before giving us the ultimate sells back there, this is what most likely could happen. right? So now we could even delete that because we're not gonna need it anymore, right? And then we just start focusing now on the current price, because the current price is the one that's going to give us opportunities to buy and sell or make money, if you will. Then if we drop it now to the H1, dropping it now to the H1, which is we have removed everything else because we already understand what's going on. So as you can see, this is a beautiful correction, guys, right? This is a beautiful correction. So what is it that we expecting or most likely anticipating here? So given the fact that that's a higher high, higher low, higher high, higher low, higher high, higher low, higher high. So at the top, we know that we sell, right? And given the market structure, this definitely looks like an opportunity for us, for the market to go down. However, it does not mean it has to do that, but that's what we understand and then what we know about the market. So you can either break out, retest, and still go to the upside if the buyers still believe that they can still buy, push the price to the upside. However, if the buyers are not taking their profits there, then they will perpetuate the price and continue and will have the price continue going to the upside. However, if the buyers from here took their profits there, so as they go out, the sellers start to kick in and push the price to the downside, right? So yeah, guys, and then if we can now go to the current price, so we can make sense of what's going on in there. So as you can see, if that's I don't know what that there is an actual name for that candle. For example, there's a hanging man, and I know the opposite of that, but I usually refer them to as pin bars. So that's an inverse pin bar. So if the market could maybe print a bearish engulfing afterwards, then it's only then the market could start going to the upside. So this is what I'm trying to say, guys, when I say don't dwell too much on the past, because this whole past price, for example, in this current scenario, doesn't matter anymore. That is the one that is important, because that is where we're going to get or expect it. Sorry, that is where we're expecting the market to give us an indication of what is it that we want to do next. Okay, so that's what I mean. So just to give you another example, guys, quickly, we're gonna go to GBP CHF. Quickly, we're gonna go to GBP CHF. All right, so I was trying to zoom it in. All right, so we're gonna do the same thing, guys. Okay, we're gonna do the same thing. So if, for example, yeah, guys, when your technical skills are at par, and then even like any type of market structure, you can always try to break it down, and then it's gonna make sense, right? Because to be quite honest, this may not be clear to somebody else, and that's okay. But as they level up and grow, they get to understand how the price moves. So as you can see, guys, we have that high over there. It's not worth having all of that, because what are you trying to imply with that? So it's not important for us to focus on that. So that's why sometimes we find that other people, when they analyze, they start only on this part, because there's no point or anything that you're going to use by drawing a trend like that, because how could you explain that? For me, it doesn't make sense. So it's not worth my time and attention, because I'm not going to get any opportunities in there, but I can work with what I understand and see what can come out of that, right? So for example, we have that high, we have that low, right? And then I think we could also draw another trend line over there. So if you see everything, guys, on the higher time frame, you can just simply highlight it and then adjust it as you go lower and lower and lower, because the price gets clearer and clearer as we go to the lower time frames. Okay, so now that we're here, okay, we can just fix the prices, and then it makes sense today, guys. We don't have to force it or trying to do everything else. So do you realize that we do not have any other trend lines besides what we have over here? This is a nice rising wedge, the way I see it, which we've broken out of it. But does that wedge really play much role in understanding what's happening here? Pretty not much, because I already see that a head and shoulder, of course, did play out. Okay, that's fine, but we can only use this rising wedge only for this low, because then if the market end up going as far as to the downside, then this is where we're most likely expecting to take our maximum profits. But anything else in here does not, anything else here and this rising wedge does not matter anymore, because we're not going to use that. The price is no longer there. We have broken out of the structure. We're not going to do anything there, guys. So what is it that I see, or what would you do in a scenario like that? So what you would do then, guys, if you look at this carefully, right? I'm going to show you the possibility, like the probable possibility of things here. So as you can see, we have this high. So if you were analyzing here, you would then say, okay, if this is an impulse, then this is a correction. It will only buy at the retest and go at the top. All right. So that's a scenario as to why the market could possibly buy. All right. If not, then the market would come here and then go back up and do that. So what does this mean? It means that we might be having an inverse head and shoulder to go to the upside. So this is the scenarios where the buyers could come in and push the market to the downside. However, if we introduce back that rising wedge, right? This simply means that should the market break below retest, then we might be standing chances of going to the downside, okay? Because if you look at the nature, lower low, lower high, lower low, lower high, lower low, lower high. So what's possible here is getting another lower low, but we just need to be cautious of this level, because maybe that could be an emerging inverse head and shoulder, hence the market would potentially go to the upside. However, if it does not respect that, it may move in higher and lower lows and lower highs until it gets to that, before actually giving us a nice opportunity to buy. So this is how I think. This is how, guys, you don't dwell much on the past. You can only use the past to understand the current conditions, and then when you have done doing that, you move on, guys, right, and go to the current price and make sense of it, whilst not forgetting what you saw previously. So that's the first thing that you do. And then the second thing, guys, that is important, I've been talking about it a lot in my previous videos, that trade what you understand and keep them less as possible. Right. So for example, guys, I want to show you something, right? You already know this thing. So Euro USD and USD Swiss francs are negatively correlated. Okay. When Euro USD is a buy, USD Swiss francs is a sell. Okay. So that is, for me, for example, like I said, that I would trade these two pairs because I know when the other one buys and then the other one sells, right? But of course, if I have losing trades, that means I'm losing both sides. That's the downside of it, right? Which puts the account under so much risk. But if you can just go to Euro USD that is clean, so that I can show you exactly what I'm talking about here, because I also want to show you another nice feature, guys, that you probably do know of. But yeah, I think you could also use it to your advantage, right? So when I'm saying that less is more, guys, what I'm trying to say here is focus on the less that you understand, right? So I'm going to show you now what do I understand about Euro USD and USD Swiss francs. So I'm just going to remove the drawings quickly, and I'm going to start on the daily time frame and then zoom it in. Yeah, guys, I'm going to zoom it in. Right. So if we start on the daily time frame, guys, right? I want to show you something. You can literally see that Euro USD has been trending to the downside, okay? So if you want to have them on the same chart, you simply go to your top left, right? And then you type in the USD CHF, okay? And then you put it like that, okay? So look, for example, exactly what I'm talking about here, that when the other one buys, the other one sells. This is enough for you guys to see what I'm talking about, because if you look at Euro USD has been selling, right? Euro USD has been quite selling, guys. I don't know why it doesn't want to, sorry. I don't know why it doesn't want to go down. Maybe it's probably because it's a daily time frame. But if you see this clearly, guys, it's exactly what I'm talking about, because Euro USD has been selling, right? On the other hand, USD Swiss francs has been buying, right? If we look at it from a bigger picture, all right, this is exactly what I'm talking about, guys. This is what This is what I'm trying to say when I'm saying that the less is more. Focus on the less that you understand. Because, for example, just to give you a quick sneak peek of what I'm trying to say here is exactly this. And then if you can just drop it to the 4-hour time frame, you would, oh, nice, beautiful. So you can see that at some point, USD Swiss francs was consolidating for quite a long time before it actually gave us a clear direction. So this is more like a consolidation, but it's not, we can't say the same with Euro USD because it's been trending more like to the downside, right? Whereas this one, it's been having like an upward slope, but if you look at it from a bigger picture, it's sort of like a consolidation that was intended or to the upside. Okay. So if you drop it maybe to the H1, definitely see what I'm talking about. Because look at this, guys. Let me just erase that and then also erase this. So as you can see, this is a similar structures. USD Swiss francs has been going to the upside before the breakout, and then it's most probably going up there, right? While on the other hand, Euro USD kind of like has been going to the upside as well. But the only difference is that okay, the market structure wise it's been going to the upside, but at the current market price it's been selling, and then Euro USD has been buying, and then USD Swiss francs was a buy, Euro USD was a sell, and then it started consolidating to the upside, and then to the up, yeah, to the upside, and then kind of here as well, right? Okay, sharp, and then the market downside, okay, downside, upside, and then upside. Okay. But either way, guys, what I'm trying to say to you is that when the other one buys, when the other one sells, because sometimes when you analyze the DXY, you do not necessarily have to analyze USD Swiss francs because they move almost the same, right? So if I can just show you, for example, if I can just quickly show you what I'm talking about when I'm saying that the DXY is correlated with USD Swiss francs, you would see exactly what I'm talking about. Yeah. So DXY is the light blue one. So as you can see, it's more or less the same thing, guys. More or less the same thing. So hence I'm saying that sometimes when you analyze the DXY, it's not necessary for you to analyze USD Swiss francs and vice versa. Because look at this, guys. Up, consolidate some type of consolidation, down, impulse move correction, breakout, retest, sell. That's USD Swiss francs, the orange one, that's the DXY. So that's what I'm trying to say. So these are the type of things, guys, that I understand. So you can apply the same thing in your trading. Only focus on the less that you understand. Focus on back testing it. See how it reacts and all of that. Because at some point, in as much as USD Swiss francs and Euro USD are negatively correlated, but we can see similar movements of a year if we can just be honest, guys. Honesty is important because we've been saying that it's been going to the upside. The Euro USD has been going to the upside as well, right? So one would ask, what's the correlation are you talking about then? But it happens. But if you can see on the current market price, then you'd see that Euro USD has been a buy, USD has been a sell, and as well as the DXY. So we're done now with the second one. So the last or the third one, guys, just not to make this video that long, I have keep it simple, guys, right? So another thing that is important is keeping it simple. So let's analyze, for example, Euro USD quickly and show you exactly what I'm trying to say when I'm saying keep things simple. Okay, we're just gonna remove the drawings real quick. Let's remove the drawings real quick, and then I'm gonna start off the daily time frame, right? So starting off on the daily time frame, guys. Okay, come on, bro. All right, so as you can see, guys, we are currently on a bearish trend. Okay, this is a bearish trend. This is a bearish trend. Then we can just clone that and then put it like that. Okay, nice, that's good. And then drop it to the 4-hour time frame. So we already understand on the daily that we are in a bearish trend, but the market is kind of like broke out at some point. But now when we come here, does the bearish trend matter anymore? Not really. So keeping it simple would mean that we need to delete that. And then we just focus on the fact that we are now playing between this supporting trend line and that resisting trend line over there. Right. But of course, it changes the whole thing because with that daily trend line, we understand that the market has broken out. So when the market has broken up, we looking at the possibility of the market buying and go to the upside. But are we really going to need that trend line? No. So what's the point of keeping it? Try to see it without unseeing it. Try to unsee it. Try to see it without seeing it. Yeah, that's what I wanted to say, guys. Hey, English. And then if we can zoom in there now, so quickly just zoom in, guys. Okay, so we can see that we have that touch over there. We have this touch as well over here. So guys, when you analyze, be honest to yourself, don't fool yourself. Because when you fool yourself, you're fooling you have the freedom to do everything here. But the last thing you want is fooling your own self. So we have that high over there. Okay. So structure wise, right? This is what we have. But at least this is something that we can work with because you already understand on the daily time frame what's going on, right? So because this is simple, we know that if we break out retest, then we might be going to the top. But there is a catch here. That's why guys, structure is important, right? Because in as much as that was a breakout, but if you look at this carefully, this is an impulse move. So sooner or later, the market might be going to the upside now. That's okay. But if you look at the longer term or the bigger picture, you would realize that maybe when we get here, we might be getting that. And then if you also look carefully, this is the reason why the market would become a sell over there, right? So you need not to be fooled and start thinking that, okay, the market might be going to the upside. No, 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 no. But if you look at this from a structural perspective or point of view, you would understand why sells may be imminent when we get to there. Because the market might just not be wanting to sell there as of now. As a result, it wanna take other traders out because it wants to make you believe that it's going to be a buy and then eventually start selling. And then even if you look at the type of structure or the way that we're approaching that level correctly. That's a first touch, second touch, and anticipate a third touch. First touch, second touch, and then anticipate a third one. Once we break this one, we know that the overall target is this one. So basically, guys, this is how you would keep it simple. And then dropping into the H1, you would more or less see the same thing, but it's going to be much more clearer than what I'm saying here. Right, meaning that as I'm saying, first touch, second touch, so we have an anticipated third touch over there, right? Sorry, despite the fact that we might not be respecting that trend line, but the point of interest or the main key level would be that resistance and then also that trend line, but it just depends on what the market is going to do. Yeah, man. So basically, yeah, guys, the market, if you can look at it clearly there, it started to show signs of wanting to reject. Let's maybe see on the 5-minute and as well on the 5-minute, it's building up a correction. And then once it do that, sooner or later, it may play along for now, but it would be just gathering more strength before actually going to the downside. So guys, I don't care what happens afterwards, but I think that overall or over everything here, no matter what happens, we might get sells. Short term, it may be buys, that's fine, but long term, I'm looking at the possibility of the market being a sell. So that's how you would keep everything simple, guys. Right? So I'm not gonna go to the fourth point, just not to make this video that long. So yeah, guys, if you enjoyed and liked this video, just give it a thumbs up, comment down below as well. I will definitely see you on the next video. If you watched up until the end, thank you so much.